Good morning. It's Friday, September 22nd. I am starting early at 7:55. I know I'm usually on at 8:30. I've got to be out the door by 10 o'clock this morning. You boys going hiking. It's a nice day out there. Friend took off from work, so I'm going hiking. Now, first thing is, I know I promised a TrendSpider offer in the private Facebook group. That is delayed right now. It will be out this weekend, I hope, but it is delayed. TrendSpider, let's just say they want to try something, and they're giving my audience on the podcast and newsletter a special offer. Let's just say it will be 1 year of Elite with a 2 handle on it. I'm not going to say the price, but it's a 2 handle. Look at the offers right now. Elite, $780 a year. Skip the trial, buy now for $468. You guys know, I don't think we've gotten under a 3 handle on a yearly subscription for TrendSpider at this level. But I'm told it's a 2 level. Don't have the final confirmation. If I get this offer, I will do a special podcast tomorrow or over the weekend. It will be Saturday or Sunday. And I will do a YouTube video, and I'll do it live on YouTube. So you guys who don't normally tune in may be able to tune in on the weekend. So make sure you're subscribed first off to my YouTube channel. And if you want to get there, just go to Linktree, linktr.ee/daily stock pick. And the YouTube logo is the fourth one in, sorry. And you just click on that and you can subscribe to my YouTube channel. Now, that's the first one. You can see that. Right there is the YouTube channel. I would turn on alerts if you want to be part of that one. I'll record it live. My plan is to probably go over just my system and understanding what I do in TrendSpider every morning. For those of you that don't maybe know or don't maybe join the YouTube live, but on the weekend I'll do a live so that we can look at things. Again, it's all for this special offer that TrendSpider has just for this audience. So if you want, go over to YouTube, start that one, and take a look at it. Now, the other thing that I wanted to highlight with TrendSpider, they sent an email out, and I really like this. Here's what it is. This is a TrendSpider Technical Analysis Series, and it says Super Trend Indicator on the thing, but that's just because that's the latest video that was posted on this. But you've got a playlist. You know, people that are new to trading say, hey, how do I, understand trading? Well, here you go. This is a playlist, how to use the RSI indicator. This isn't specific to TrendSpider. This is on a Webull. This is on any platform. What type of chart is best for trading? Candlestick, Heikin-Ashi, or Raindrop? Raindrop, I think, is only TrendSpider. But you can look at candlesticks. They explain everything to you. And it's an 8-minute video. Vortex indicator, introducing this powerful and relatively unknown technical analysis indicator. That's probably on other places. Volume in the stock market, how do traders use it? That's not specific to TrendSpider. You can take this technical analysis series, scanning for end-of-the-day breakouts in the stock market. Take a look at this. I mean, these are from years ago. So the platform may have changed since this, but it's not, how to use the MACD indicator to improve your trading. This is not specific to TrendSpider. So when I say there's plenty of tools out there and TrendSpider provides them, they're not just charging for them. So if you're one of those people who doesn't necessarily subscribe to TrendSpider, get on here. Just get on there, take that technical, and again, those videos are 5 to 10 minutes each. It's not a huge outlay of your time. If you're listening to me, you're spending an hour listening to a douche on the internet every day, you can spend 5 minutes looking at a technical analysis series so that you can understand the MACD and you can kind of get to know these things. Somebody asked me yesterday, I got an email, hey, I'm new to listening to your podcast. Is there any way to understand what you do? And I basically wrote back, I think, 6 things. I said, hey, the first thing is just continue to listen. For me, I listened to people when I was learning. I read voraciously. I mean, followed people on Twitter. For the paid newsletter people, I kind of went over my entire journey of how I learned specific YouTube channels that I learned from. TrendSpider was one of them, and it's a huge benefit. That TrendSpider, it's not just TrendSpider analysis. I was on TrendSpider's YouTube video prior to them actually, I was watching their videos prior to me subscribing. And that's kind of what pushed me into subscribing was those videos. So I would suggest, first off, following, just continuing to listen. Second off, subscribe to the newsletter. It's good. I mean, it's the way I learned is osmosis and just by continuing to do stuff. So let's talk about yesterday's absolute disaster. Absolute disaster. Good news. United Health, like I've said, up over 500. FedEx was up 4%. You can see that one. It was a disaster of a day. Just 100% a disaster of a day. Yeah, there's nothing else that I can say about that one. That heat map explains it all. So what I'm going to try and do is take a look at our algorithm in SPY. You guys know SPY and QQQ are the two ones that I take a look at to try and determine the health of the market. You see a complete fall off here. Complete fall off under the 9-day. You have no confirmation. The RSI is at 27. The MACD is completely down. You are completely in reverse mode. So I don't want to sugarcoat it. You're below that 200-day. When you go below that 200-day, in the past, you haven't stayed there for very long. And if I didn't reiterate this yesterday, I want to make sure everybody hears it. This is the worst time seasonally for this market. There's an issue here. As I look at Tim Cook in New York welcoming people into the Apple store, to buy the iPhone 15. Boy, there are fanboys like you wouldn't believe. Now, I'm a fanboy, but I'm not going to buy the Apple TV, and I'm not going to try and take pictures with Tim Cook. That just seems kind of, I don't know. Again, don't listen to a douche on the internet. But take a look at this SPY. Every time we go under the 200-day, you kind of get back over it. So I wouldn't worry about it too much. If you are worried about losses, let's take a look at a long term of the SPY. And I went over this yesterday. If you go back, this is a weekly chart. If you go back to let's go back to February. The end of February 2022. This was when rate hikes really started. SPY was, the high was 441. The low was 427. Right now we're at 432. We're right in the middle of that. That was when rates were zero. They were just starting to get up. So people should have been panicking. Hold on one second. I still have some tooth issues. But people were panicking. They should have been panicking because we had a way time down. I got to edit that. I'll edit that out. Mark, the thing says 9:20. I just didn't change the date. But here, that rise down, think of what was going on. We had rising rates. We had growth being slowed. We had the Ukraine war still going on. There was a lot wrong during this time. Now you've got inflation kind of down, under control. Employment is still good. Earnings are going up. So I don't want to panic you, but the reality of this is if we come down to that 50-day, which we did from January to February of that portion, if we come down to the 50-day, you're going to 414. So let's just look. You're at 431 right now. What is 431 minus 414? Okay.
It's 17.
17. What is 17 divided by 431?
It's approximately 0.03944.
You got 4% down just to get to the 50-day. And that's not unheard of to get to the 50-day on a weekly on SPY. Take a look at it over time. This goes all the way back to 2015. We can move this back even more. It's, it hugs the 50-day. And this is during the bull market. So my point is be sparing in what you add, but realize that 480 is up there. If we don't go to a recession, 480 is there. So I point this out just to say, I lost a bunch of money in the stock market yesterday, well into the 5 figures. There have been days where I've lost 6 figures, in this market, and it doesn't feel good. But what you have to do is power through that. Understand that there are good stocks out there with good earnings, with good products, good management, and good growth. And some of those stocks are the great 8. I think in my mind, you look at Apple, 175. I think it's a $200 stock at some point in time this year. Amazon, 130. It dipped under 130. That was just at 145. I think that's a great opportunity. Boeing at 200. This is a $240 stock in long term. They have fuselage problems. Are you going back down to under 100? No. Bank of America, 28. This is a great bank. Cleveland Cliffs at 14. Remember that CEO bought a bunch of it at 15. Costco at 557. They're going to do a price raise on the membership. You're seeing a $650 stock then. Disney at 83, they have some problems. I still have it in the core portfolio. I still think it belongs there. I think it's just undervalued. I think they'll sell ABC. They may sell ESPN. They're going to get some cash flow in there. Devon, 46. Devon, it's going to be at 50. Buy it at 46. Don't load up the Brinks truck on it because we could see a reduction in energy. But at 46, this one hasn't participated in that energy rally. Google at 132. Like I said, 130 is fine for it. Goldman Sachs, 330. If the IPO market comes back, you're golden there. Coke at 57. That's a $60 stock. There you go, 4 or 5%. Eli Lilly, we've recently had a pullback in Eli Lilly. This one, $600 stock. There's a weight loss drug involved in this. Meta at 298. The forward PE is only 18. Understand, that is cheap for a stock. If Mark Zuckerberg stops spending on the metaverse, you can get Meta under 300. The algorithm has you out with a 2% gain on Meta. I don't know that I'd necessarily get out with the RSI at 41. The MACD is turning down. Could you get this at 290? Could you get it at 289? Absolutely. But you know what? If you want to add 10 shares of Meta over the next month, just add one. Add one at 298. Get the ball rolling. You don't want to miss the days when you're up 5 and 6%, or the weeks, I should say, that you're up 5 and 6%. Moderna, it's a hype rally on COVID because they have one shot. It's COVID. That's all they have is one shot right now is COVID. Now, the Biden administration yesterday announced that they're offering free COVID tests again for mail order. So I think you're going to see some COVID hype. I mean, my parents are going on a cruise. They're starting to require the COVID shots again. So Microsoft, 321. Is that a $350 stock? Copilot comes out. AI gets hyped again. Yes. Netflix, the writer's strike is almost over. 385. Again, I can go down the line. Nvidia at 415. This one's just getting unwound from the recent run. But at some point in time, you have to start adding this, and it's at its 200-day. When's the last time it was at its 200-day? It was a while ago. I mean, look at the long-term chart of this one. This one has lost a little bit, and it seems like a lot because you come down from 500 to 400. But look at this drop. From November 2021, you were at 348. You went down to 114. Your 200 days at 194. I mean, are you coming down there? I don't think so. I still think short-term they have pricing power. Oxy was at 65. Came down to 63. It's up 1% in pre-market. Pepsi at 175. I said that's a $180 stock. Buy it. Qualcomm, I think this one's a $120 stock. So sometimes you have to put up with some losses. Roblox, I think this is a $40 stock. It's getting killed. And Roblox is one of those bet ones that you want to bet on. If you want to hold it for the long term, I don't think it's unheard of to hold this one for the long term. If Mark Zuckerberg believes that the metaverse is that big, Roblox will be one that will take that profit. And I don't think that Facebook will be very good at it. because, they spent, $10 billion and 300 people a day visit their metaverse, whereas Roblox has a ton of people visiting their metaverse. Shopify, 54.72. This one has lost its way. I don't think it's lost its way as a company. I think it's just lost its way as a stock. So it's coming down here. If you see this bottom come down to, where's this low? 51. Maybe you come down to 51. Maybe you fill this gap all the way to 47. But start adding to these positions. And in my mind, I don't think that you're doing yourself any disfavor by doing that. Again, we're in a weakness. You got to find places where you can put your money. We talked about here. This is a crazy trade. So remember we talked about Cisco buying Splunk yesterday for $28 billion. Splunk was up 40%, I think 20 or 40%, something like that. The day before, someone opened up 127 calls for $22,000. The contracts were 4 cents. At open yesterday, the contracts were $18.30. That they exited this position for a return of 45,650%. So, yeah, I mean, we're talking this. Yeah, they made themselves a billionaire with one trade. You can't tell me that there's not insider trading going on in that one. It was crazy. And Unusual Whales is the one that I looked at. Yeah. But Splunk has continued to go up. They got out of that trade yesterday. I mean, like I said, we got killed. One that really, really took off was DRV. And you can see DRV in the algorithm. Buy here at 51.46. Buy here at 51.58. You're still in. And honestly, it's at 56.58. You've got your 10%, and I don't think you've lost confirmation. Your RSI is a bit extended at 71, but I think you're fine. If we talk about what went wrong with the market, Gene Munster has a great thread here. A great thread. Powell's comments today pushed NASDAQ down 1.4%. That was on Tuesday. I'm going to cover what was the sell-off. This is exactly what it is. Now, the other thing that people are talking about, and I don't know enough to actually look at this stuff, but they're talking about the amount of bonds that have been issued and the amount of people buying bonds, and that this is a bond bubble. And the fact that people are, the U.S. government is pushing treasuries out there at a record pace at 4%, and people buying them at 4%, and they're long term, and then there's short term stuff at about 5%. I don't know too much about it. I'll do some research, but just understand that people are talking about a bond bubble, and what a bond bubble would mean is that more money into equities. If the bond market, now understand, bond market blow up would not be good for anybody, but yeah, I'll let you know if I hear more about that one and read more about it. Now, AM from YouTube wanted me to look at Shark Ninja, and the symbol is SN. These guys make vacuums, they make blenders, they make everything. You can see on their earnings last time, it went from 38 cents to $24. That was a crazy, crazy one. Let's look at SN on Finviz, because I don't even know. I mean, I haven't looked at this company. Let's see. They are making money. Their PE is 27. Their forward PE is 13. Year to date, they're up 3.792, so that must be some data issues or something in there. Average target price is 67. That was September 11th. Jefferies is the only one that covers this. Tesla upgraded, Rent the One downgraded. Let's see if this gives me some information on Shark Ninja. Let's see. Top downgrade, story continues. Top initiations, Shark Ninja. Jefferies initiated coverage of Shark Ninja with a buy rating and a $67 price. The company is well positioned to grow its market share across new and existing categories given its global rapid innovation and commercialization flywheel model. The firm tells investors in a research note. So Jefferies upgraded them. There's not a whole hell of a lot here. It's a small cap. They have 138 million shares floated. In my mind, I mean, what do I think about this? I don't know. I mean, they were losing money. Now they're making money. You see this stock from 28 cents all the way up here. Something happened. I don't know exactly what it is. I think you're looking at a retail trade. I do think that, hey, I have a Shark Ninja from 15 years ago. I have a Shark Vacuum. I have not bought a Ninja blender. I do have a Vitamix. If you use this and you think that they're, a good company, I don't see any reason, I'd trust Jeffries. That's just September 11th. I think Shark actually is a better value than Dyson. And Dyson, Dyson is the king of vacuums. We can talk about that one. Shark is a better vacuum for the money because typically, I was in Walmart yesterday and I looked at Shark and I liked, they have this mopper thing and for wood floors and it just looked perfect for what I needed. So, I mean, AM, I think you're probably asking about it most likely because it's a retail trade. Because anything that looks like this chart, retailers get in. And so I would just be careful. A small float with 138 million shares, or say 49 million shares floated, you might have some problems filling that trade. So I would make sure that you could trade it, make sure, try a small dollar amount to get in and get out. Because if it takes 15 minutes to fill your order from your brokerage account, that's a stock that I would not take a chance on. Because when we look at this chart and you see it going from 24 to 43 within a couple of months, that's not a stock that I want to hold onto and not be able to get rid of. A good example is VinFast. Because if you took a couple of days to fill an order, because nobody wanted to sell at 76, people were selling at 50. It's going to take you a couple of days. Nobody wanted to buy at 76. So if you had a limit order out there, it was sitting there. And what did it do? It just continued to go down. So you want to be careful in these. Yeah, UNH at $500.49. Gabe from Facebook. I was wondering what everyone thinks about NEO. I've been dollar cost averaging down about $10.50. Keep adding more. The problem with EV companies is real. I think there's more downside, and I'm skeptical about staying in. Okay, let's look at the 1050 price point on NEO. NEO is one that I've traded for years. When I got my Tesla in 2018, I learned about NEO. Their battery swap technology. I really, really like this company. Now, I've traded in the past. If we go back and we look at weekly, I can tell you this run right here in 2020 was 100% just economy. This dip right here, I think in 2021 was where I really started investing. I think it may have even been this dip back in 2019. The Chinese government put in a ton of money. It might have been back here in 2019. They were basically going to go bankrupt. It was at $2. And then all of a sudden, Chinese government says, you know what, we're going to prop this company up. And boom, you went up to $5. Now, I think a bunch of my friends bought at $5 around here in February 2020. They stayed in and, $2.50. I told them to get out when it hit back at $5. I was wrong. Completely wrong. It went all the way up to 50. And my friends were like, what the fuck are you telling me? Well, look at where it went to 50 and we have yet to get back there. So my point with NEO is I don't know where it's going. And Chinese stocks in particular, they're so reliant on the government kind of funding. These guys are losing money. They're losing $2.8 billion. They have cash on hand, $2.23, 1.65. So they have about $3 billion. And then they're going to need to either dilute shareholders or, and remember too, this is a Chinese stock. So what a Chinese stock is, you basically, as a non-Chinese citizen, you can't hold stock in a Chinese company. So essentially what they do is they issue a paper in the Caribbean, and they that's what you're buying on the stock market. And so the Chinese government can say, you know what, we're not going to allow that again. And so all of a sudden, NEO is no longer an American company, and your stock is absolutely worthless, and there's nothing that you can do about it. So you need to be careful. Now, if you've dollar cost average down to 10 and you're at 845, let's take a look at the algorithm real quick. Let's run the algorithm and see where it is. because I don't see a lot of support in this one. I mean, I don't know exactly what happened, but you can see the MACD crossing down, the RSI getting out. This is where if you have a company like this where you don't have any hope of anything particularly of hype. I mean, you could have hype from 9 up to 15, and that's where this one goes. Your hope is that in October they announce deliveries that are record setting, and then you could potentially see a bounce in this one. I just would probably say cut your losses, find somewhere else to, find a good company with good earnings, with good management and good products. Because NEO is a little bit, Warren Buffett puts his BYD company limited, BYDDF. This is the one, BYD Company Limited. This is the company that makes EVs in China that Warren Buffett invested in. And you can see the difference in the charts. You look at a weekly of this one. This one's kind of held up. NEO just hasn't held up. This one has held up since 2020. It hasn't gone down. And so that's where Buffett and Munger and those guys, they look at companies, they look at the viability of companies. These guys are selling cars. BYDDF, let's see. BYDDF, we'll go over to Finviz. BYD, let's see. I guess the Finviz doesn't have it. They don't have any financials. It's hard to find stuff on this because it's an over-the-counter kind of thing. But again, BYDDF is BYD Company Limited, I believe. I believe that's the thing. But Gabe, I'm sorry to tell you, I've been out of NEO for a while. I don't believe in that company. The battery swap technology, I love. But if I got a battery and I'm charging it to 100% every day and then I go and swap it, the battery degrades. And so I think that company's a little hurt. Butch from Facebook says, KO. Here's his note on this one. This one's funny because I bring this up all the time. KO, slightly bullish divergence on the daily chart. And he posted the chart in the Facebook group. And if you want to see it, go to the Facebook group. Weekly chart looking to find support off the 200 EMA. Only severe economic pressure has forced price down to drop below the 200 on the weekly for well over a decade. Buy or not to buy? I don't know if I'm a fan of this stock or not. Solid stock, but boring AF. Slow and steady. Butch, I own this one. And I tell you all the time, $60 is the swing on this one. Look at the algorithm. You're out. It's dragged it down to 57. I don't think it's too expensive. But at some point, and now I think Coke has more exposure to restaurants than Pepsi does. I own both of them. The PE isn't crazy. It's 23. You're making what, $10 billion. Your market cap is $251 billion. Target price is $69.86. Most recent July, reiterate, JP Morgan, they put it at 67. I say 60 is the swing on this. Year to date, you're down 10%. It is boring as hell. And there's a bunch of selling here in the 60s. I can't argue with that. It's a little bit high with the extended point, but you can see up here at 62, up here at 64. The range is 54 to 64. I mean, that's not an enormous range. You're 11% off your high of 64. You're 6% off your low of 54. Are you going back down to 54? Maybe. I just don't see a floor at 54 being a bad price to buy this stock. The P is a little bit extended. You don't have confirmation. So I would be a little bit wary of buying here. Again, I'd rather see you buy when you do have confirmation over that 9-day. It's not like this stock is going to overnight pop up above that 9-day. But you can see when it's below this 9-day, it typically kind of hugs to that one. The 50-day is still positive. The 200 is still positive. The 21 and the 9 are turning negative. And you're right. It looks opportunistic. Over the history of this one, if we pull this back and look at it, you've seen some pops, here in when COVID was shut down and this had only restaurant exposure. It went all the way down to, let's say the low was 36. 36. I mean, 36 was a great time to buy this one. Anytime it dips below that 200 day, it's time to buy. Is this one going for the 200 day? If it gets to the 200 day, the 200 day is 56. Are you upset if you buy at 57 versus 56? No. I mean, how much of this are you buying? The algorithm, I've said this before, the algorithm doesn't work on this one. The volatility is not great. Just use $60 as your price. I mean, you can clearly see in this portion right here. Let's pull this. This is probably your top at 65, and you're probably putting in your bottom at 55, 60. This goes back to 2021. So I don't think it's a bad buy, but you're right. It's boring AF. Completely boring. So I don't think you're going to make a fortune off of this one. I also don't think you're going to go poor off of this one. It's not a horrible thing. Are you going back to where we shut down the world at 47? I don't think so. I think at worst case, this volume shelf right here at 54. I mean, again, if you dip below that 200 day on the weekly, I think you're fine. Scans, KOLD, natural gas continues to just be a laggard. 52 was the price on KOLD. This is the short, triple leveraged short ETF on natural gas. 52, and you're at 65. 52 was bought here August 16th. So I said be careful because natural gas is so cheap. I was wrong. 100% wrong. If you look at the weekly on this one, we talk about this all the time. This is a decaying asset. And I drew this way back, probably in I'd say sometime earlier this year around that split. And I said, be careful because it's going down here. Clearly here in August of 2022, buying this at 12 and holding on to it up here at 64. This is KOLD. This is a short on natural gas. Winter is coming up. I don't know that I'd necessarily hold on to this one, but it is interesting. We talked about Pinterest yesterday. They have a cross up, just by chance, had a cross up since we talked about it yesterday. 27.48. This is the MACD's kind of hanging out there. I continue to say I think Meta is just a better buy. Splunk had a cross up, and this is just because of the Cisco purchase. It was horrible down here. You got out with a 21% gain. This was a great freaking trade if you got into this one. August 21st at 98, went all the way up to 121. You're at 144. In pre-market, you're at 144. Great trade on that one. One that I had in my watch list that I think is interesting, OSUR. This is one that came back to its 200-day at $5.57. I don't remember why I had it in my watch list. I do know that it's got some volatility. And so you're under the 200-day on this one. The earnings are past. You do have some type of gap here. It looks like an earnings gap up from 455 to 470. So this means that this hype rally was probably earnings related. And then people just started getting out. But it did cross up here at 557. I would be careful of it. Just because I don't remember why I put this in here, and I think it was volatility. They are making money, $9.52. Now, the target price is $5.95. You're 28% below your 52-week high of $7.82, which was way back here in, looks like May. But resumed coverage, Evercore, I'd be careful of that target price because it's not heavily covered. But these guys, together with his subsidiaries, point of care and home diagnostics tests, specimen collection devices, and microbiome laboratories. It's an interesting one. I like the chart on it. I don't remember why I got it, but it's down below its 200 days, so I figured I'd put in one that, there wasn't a lot of cross-ups yesterday, but BMY is one. BMY is Bristol Myers. The chart's ugly. I just don't like this, but because it's the only one in the S&P that crossed up, I figured I'd bring it up. Healthcare, I'd rather see you in Eli Lilly. I'd rather see in United Healthcare. Both are significantly extended and up there. But United Healthcare yesterday got up above 500. It's at 549 cents right now. I don't think it's horrible to buy that one. But Eli Lilly has their ex-dividend date on October 5th. So I think there's a ton of opportunities in this market. I think they're out there. I just think you have to find them. Again, this weekend, I'll be doing probably a special on TrendSpider. If you want to take a look at some TrendSpider stuff, there is this technical analysis series that I will link to in the newsletter. But I'd go over to my YouTube channel and set up alerts, because I'll probably do it if I do get this special offer. And we talked about it at the beginning, just in case somebody didn't hear. The elite level, I got a special offer that is incoming from TrendSpider just for listeners and readers. This is just for my podcast only. I can't tell you the exact price, but let's just say the $780 per year charge moves down to a 2-handle. So it's going to be a great buy, great offer. They just kind of reached out to me last night. I was hoping to have it by today. I don't. If you want any of the links, you can join Webull. I tell you all the time, Webull, I think, is one of the best mobile out there. And the reason I recommend this over Robinhood is try and get your money out of Robinhood. It's difficult, and they charge you $70, Webull. It's completely free. You can wire yourself back and forth between your, I think it's just transfer, like 3 to 4 days. It's free. Back and forth to your bank account. It's nice and easy. Visible, $20 off your first month of service. If you are paying more than $35, I think it's $30 a month for your cell phone service, Visible has a plan for you. And using that link, you get $20 off your first month of service. I transferred my number. It's so easy to transfer your number. It is crazy. If you bring your own phone, here's the plans. You can get, you've already got everything you need, $25 a month. So it is $25 a month. Your phone, bring Visible Plus. Join with a phone to save $10 more for 6 months. So what's this Visible Plus? Let's say get started. Let's look at this real quick. iOS, select your phone software. Select my model. I'll say I got the 15 Plus. Why not? Your current carrier. Let's say that we are Verizon, because that's where I came from. Check your phone compatibility. I know it's compatible. Love your phone. Keep it. Great. Join with phone. Let's see. They want MMA, but let's see the plans. Check out our plans. $35 or $25. That's it. I mean, I love this service. You get unlimited service for $35 or $20. I don't know why people are continuing to pay, unless you're paying for your phone. If they're subsidizing your phone, it makes sense to go over to Verizon or AT&T. But other than that, doesn't make sense. So there's Webull. Newsletter is right here. It's free. By the way, if TrendSpider does sponsor and give me that offer, then the newsletter will be free for everybody this weekend. I'll do some educational stuff for everybody, and it will be free. Next one down is if you're buying a Tesla, use my link. I had a buddy use my link yesterday. He bought a Model Y, and I've told you that I'm looking at a Model Y. I just got to figure out if I qualify for the $7,500 off through the federal. I may have some tax issues where I don't qualify for the $7,500 off. So it's interesting. But if you want to follow my trade, Savvy Trader, you can follow my trades. I've got 2 portfolios. These are really just for you guys. Remember, don't follow a douche on the internet. Trading portfolio has a bunch of stocks that I trade. Core portfolio is just the 35 stocks. If you're setting up a portfolio, that's the one to follow, because I'll take stocks in and out of there. And if you want to tip me, there's my tip. Okay, I will talk to you guys this weekend. I will have something this weekend. If you're interested or you want to reach out, all of my socials are on the link tree, linktr.ee/dailystockpick. Okay, talk to you guys.